Are you able to bring home enough money personally? This is a tough question. What is enough, anyway? Well, to answer this question, we have to start at the bottom. Bare minimum. What do you need to bring home and contribute to your household? As the business owner, you need a personal and business budget, and you need to hold yourself accountable to those budgets. If you say you're only going to spend $100 at restaurants in a month, you need to see the numbers next to each other when you spend $250 and went over budget in total for that month by only $100. Think about how much money you spend on housing, food, clothing, entertainment, car payment and insurance, gas, house cleaner, a babysitter. It adds up quickly. Trust me. But be realistic. You don't want to cheat at this because you're only going to be hurting yourself. And from my personal budget, some examples of expenses are childcare, a mortgage, subscriptions to like 1,000 things, household expenses, repairs, landscaping, cleaning, decor, IRA contributions outside of my job, clothes, pet expenses, groceries, utilities, and yes, Wawa has its own line item. Now those are examples of my expenses monthly, and you can probably relate and use that as a baseline. So back to the calculation. Figure out what the bare minimum is that you need to bring home on a monthly basis. And then expand those amounts for 12 months of the year. Now adjust for one-off things like vacations and birthday gifts, parties, Christmas, Valentine's Day, your own birthday. Do you have any other major expenses coming up that you need to account for? So now you should have the total amount that you need to bring home in a year. And if you have another source of income, or if you have a spouse that contributes to the household income, add that in too, because obviously that will help cover some of the expenses. But again, be realistic. Now there's nothing wrong with going under budget. That's awesome. But it feels terrible to be constantly going over budget. And that's a hard cycle to stop. So now you have the total amount that you need to bring home from the business. Let's just say that's $50,000 for the year. This is where the tax professional will come into play. Because when we listed out expenses, we forgot about your income taxes owed on the amounts of money you're earning. And don't forget, unlike your old W-2 job, you don't have any taxes withheld on your self-employment income. So you're in charge of your ordinary income tax and your self-employment taxes. And depending on how much in tax your spouse or your other income has withheld on it, will greatly affect this number. But for this example, let's just use the total tax rate of 25% to cover all federal, state, and local taxes. Now, if you know your tax rate's higher, considering all the taxing authorities you pay, just adjust that percentage accordingly. Okay, so on $50,000 of self-employment income, 25% is $12,500 of taxes. Yikes. So basically, we need the business to make you $62,500 every year so that we can pay our home expenses, our taxes, and everything else that we're required to pay. Easy enough, right? Well, we need to keep working backward. Next, you need to know what your business overhead expenses are monthly. So similar to your personal expenses, schedule these out in the same manner, and then add them to our $62,500 that we know we need to make. If they're $1,500 per month, that's $18,000 for the year. So now we're at a total of $80,500. But what does that represent? The only items we have left to account for are your sales and your cost of selling those goods, or COGS. So your sales less your COGS needs to be $80,500. And that means you need to know what it costs you to make a sale. And if it costs you $10 to make a $50 sale, that's an 80% gross profit margin. So if we divide $80,500 by 80%, we get $100,625, which is the number of sales you need to generate to bring home $62,500 every year to pay for your home expenses, your taxes, your shelter, your food, your vacations, and your fun. that $100,625 will have 20% costs to make those sales. So that's $20,125 of COGS, which gets us to our $80,500 number. Now, this sales number of $100,625 is incredibly important to know. You need to divide that by 12 to find out the average sales per month. In this case, you need to average $8,385 of sales per month. You can totally do that. But remember, if your mortgage goes up, if you need to add another kid to your cell phone bill, that sales number keeps going up and up as a result, in order to bring home the amount of money you need personally. So that's why it's important to hold yourself accountable to a business and personal budget. You need to be looking at your numbers to understand your overhead expenses for the business, as well as pay attention to your cost of goods sold. Because if that gross profit margin shrinks to 70% because your costs increase, that means that you'll have to make more sales as well. Everything is related, so you can't think about your personal side without thinking about the business. And you can't think about the business without ensuring that you can bring home everything you need to on the personal side. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at EngageCPAs.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at EngageCPAs.